大変長らくお待たせいたしました。Thank you everyone for waiting. 続きましてはこちらのセッションです。10兆円の行方、VC が今最も注目する投資先とは The $100 billion question, where VCs are placing their biggest bets をお届けいたします。それではこちらの方々をご紹介いたします。Our panelist from Dragonfly, Haseeb Quereshi. Please welcome on stage Haseeb Quereshi. And our moderator, 一般社団法人東京 FinTech from Tokyo FinTech Association, Norbert Gehrke. Norbert Gehrke さん。All right, thank you very much, and you can start the session.
Thank you.
Thank you very much. Good morning, Tokyo. Almost good afternoon. Haseeb, welcome to Tokyo.
Minasan konbanwa. Thank you for having me.
We'll continue in Japanese.
My Japanese is not that good. It's not that good.
So, when we were walking up to the room, you were saying it's like the first time speaking at an event in Japan, and you were trying to get a sense of the vibe. So, how did it feel? First impressions?
I'm amazed. First of all, the line coming in here, even at noon, is crazy. So I'm very impressed at just the amount of energy in Japan. My impression has always been that, so we spend at Dragonfly, we're a $4 billion fund. We invest in across the space within crypto. And we spend a lot of time looking at companies in Asia. But most of the startups, the protocols, the companies that are built in Asia, mostly that means Hong Kong, Singapore, Korea, and Japan, relatively speaking, has always been a little bit further behind in terms of its representation among entrepreneurs in building big companies. That's despite the fact that Japan is obviously a much bigger country than Korea, much more GDP than Korea, much more wealth than Korea. But Japan, my sense has been that it's been held back by so much of the regulatory and the legislative status of crypto in Japan has made it much more difficult to Japan to operate at the same height that it really should as a country and as a culture. So I'm glad to see that the energy is there among young people, builders, entrepreneurs, and that's what I'm really trying to get a sense of during this week while I'm here.
I think we've been pretty early in terms of regulation, right? Globally, 2018, the first cryptocurrency exchange regulation was here. But then having the rules is one thing, getting players on the field and actually play the game is something different. So if you look across the cryptocurrency exchange industry, we've got 12 million accounts in Japan. That's like a tenth or so of what Coinbase has. So yeah, there's something in between, like doing regulation early to actually playing the game that's stopping us.
Yeah, I mean, I don't want to come to Japan and speculate on like what the Japanese afflictions are because I'm here to learn more than I am to pronounce. But the understanding I've gotten so far is that so much of this comes from the tax issues. So we actually backed a couple of Japanese entrepreneurs, but they did not stay in Japan. They left Japan. And the reason why they left Japan was because of the taxation that if they were to stay in Japan would be so punitive that they'd be forced to liquidate a huge amount of tokens in a protocol that they built. And almost every other jurisdiction in the world that's really favorable to digital assets allows entrepreneurs to go to TGE, create a token, build a protocol, and get taxed at the moment they sell as opposed to at the moment of creation, which my understanding is that that's how, something like that is the issue that many entrepreneurs face here.
I think that has been fixed on the corporate side. So you got actually like digital asset treasury companies now, right? Like MetaPlanet and so on.
Right.
But we still have the issue taxation versus ETFs, etc. But that's like a black hole. So let's talk about Dragonfly. Blockchains are cities is like one of the famous phrases that you're known for. And so can you unpack that for us and also put this in the context of your investment thesis?
Yes, I'm happy to. So many people ask the question of why are there so many blockchains? It might seem obvious that, okay, we started with Bitcoin, that's digital gold, and then maybe, okay, we needed to add smart contracts, so we built Ethereum. But it sort of begs the question of like, okay, why are there this many? There's Ethereum, there's Solana, there's Avalanche, there's Aptos, there's da-da-da-da. Keep going on down the list. So why are there so many? Why do we need all these? Shouldn't they all go away and we just have one, maybe two of these, but that's pretty much it? And if your mental model of blockchains is that blockchains are like networks, right? So it's kind of like, it's like having Facebook or Line. And if they're networks, then you really only should have one or two of them, and they should have such big network effects that they should gobble up everything else, and it's left with a winner-take-all market, right? If they're networks, then that's the right way to understand it. But the argument I make in this piece is that networks are the wrong mental model to understand blockchains. Because a network, if you think about like Facebook or Line, these are networks that have no marginal cost of adding a new user. Having one more, the millionth and first user is no more expensive than the millionth user, right? And so you can just arbitrarily scale bigger and bigger and bigger as the network gets larger. But blockchains don't work that way. The more data, the more throughput that you add onto a blockchain, the more expensive every marginal new user gets, right? Like, we know that. Why is that true? It's true because a blockchain cannot scale arbitrarily big. Because if it does, then it's no longer decentralized. Because then it means that you can't run this blockchain on your computer anymore. And if you can't run it on your computer, you have to trust someone else to tell you that, yes, this blockchain is operating correctly, is actually being fairly validated, nobody broke the rules. If you can't validate it yourself, then it's not decentralized. Then you have to outsource it to a third party. That's why every blockchain constrains the block size. There's no physical law that prevents us from having blocks that are 1 gigabyte, 2 gigabytes large. But what does constrain it is that means that you cannot validate it at home. You don't have that kind of a normal consumer bandwidth connection. So that's why blockchains have to be constrained in size, right? And if you think about it, cities are exactly the same way, right? Why isn't it that everybody in Japan lives in Tokyo? Tokyo is a big city. It's got great infrastructure. It's got great food, great restaurants. Why doesn't everybody in Japan live here? And the answer is that you just physically can't get that many people into a city. There is a physical limitation on the ability to scale cities. That's why even no matter how big of a country you have, no matter how good infrastructure you have, you always have to end in an equilibrium where every country has multiple big cities. There is no network effects to cities. There's a bounded network effect, where the bigger you are, the more attractive it is to be in that city. But that network effect only hits a limit, and then the equilibrium is that there are many cities, right? This is exactly how blockchains work. This is why it will never be the case that it's one blockchain to rule them all, right? If you think about Ethereum, Ethereum is basically Tokyo. Ethereum has the most culture, has the coolest NFTs, it has the most DeFi protocol, has the most money, all the big banks, they're all on Ethereum. But Ethereum is expensive. Not everybody can fit on Ethereum, right? And so in order for there to be room to do other kinds of things and have many more people than could fit in Tokyo, you need another city, you need Osaka, right? And maybe that's Solana. Or there are all these other blockchains. What you notice is that Osaka and Tokyo, they're very different cities. Despite the fact they're big, they're not carbon copies of each other, right? They specialize. They take on their own personality. They find different industries that they really cater to, different cultures that they cater to. The same thing is true of blockchains. If blockchains are going to be successful, then one, they're going to differentiate more and more, the same way the cities do. They're going to take on their own personalities. They're going to target different kinds of protocols, different kinds of use cases. So, I wrote this piece in, I think it was like 2020 that I wrote this piece. And at that time, it wasn't very obvious what Solana was going to do differently than Ethereum, right? People knew that it had a different programming model, that it was much faster, it was more parallelized. But what's the personality difference in Solana? Now, in 2025, it's very obvious. Right? Now we all know the personality difference of Solana. So, okay, Solana is all about meme coins. It's all about fast money and NFTs and all this other stuff. Whereas Ethereum is much more about finance and this really august decentralized protocols that have been around for a very long time. It's about scaling in the most credibly neutral way. Very, very different personality. If you look at all these blockchains, they have very different identities, and that's why I think it's going to persist that many of these blockchains will exist. It's not going to be just one. There will be one biggest blockchain, but it's not going to be the case that there's just one. And that's why, for us as investors, we look at investing into blockchains, like new cities, that are going to carry this very unique personality, that are going to have something different in the way they see the vision of how a blockchain ought to exist. So that's why we invested in the seed round of Avalanche, the seed round of Monad. We led the Series A of Mega ETH. Many of these ecosystems that have a different take, different perspective on how a blockchain should be built. That, to me, is what's most interesting in seeing a new layer 1 or a new layer 2 being built from the ground up.
And then you also fit the L2s into the picture.
Yes. So my analogy for L2s is that so L2s I think of like if you're building Tokyo, let's say this is a much earlier time. Let's say in the 1920s, okay, in Tokyo. Tokyo was still, of course, a very big, important city. But people realize that, okay, we want to fit more and more people in Tokyo, but Tokyo is getting full, right? Even then, the geographical expanse of a city, there's a rule, I can't remember the name of it, but there was an urban planner who once defined this rule that a city can only grow as big as roughly a 2-hour commute. Once it takes longer than 2 hours to commute in and out of a city, and this changes with technology, right? As technology improves, we move from horses to carriages, to trains, and then eventually to cars. The size of these cities has expanded, but they've stopped expanding. They've stopped expanding because our technology for commuting has stopped getting better. And so as a result, Tokyo is not that much bigger than it was 30 years ago, because technology hasn't really improved to make commutes faster, right? And so cities naturally end up building to roughly a 2-hour radius of commute times. And so as a result, how can you keep scaling Tokyo, even though more and more people want to live here? Well, the answer is that you build up, right? You scale through skyscrapers. And so we've become, as human civilization, we've become incredibly effective at being able to fit more and more people in that same 2-hour commute bounding box. That's effectively what skyscraper technology is, right? And when you live in a skyscraper, you're still living in the city, but you're living in a very vertical dimension, right? You have this new thing of all my neighbors and my HOA and all the rules of living in this skyscraper. But if you live in a skyscraper and somebody else lives in another skyscraper, you still have to go into Tokyo, deal with all the traffic and the commute and the blah, blah, blah. You still haven't escaped Tokyo, right? So I argue this is what L2s are. L2s are skyscrapers. So if you're living on base, that's a skyscraper on top of Ethereum. Now, if everybody you're interacting with is also in that skyscraper, being in this hotel, if you're staying in this hotel and the conference in this hotel, it's great. You just come downstairs, go straight to the conference, no problem, right? But if you're in a different hotel, you have to go down, you have to go commute, you have to find a car, get on the subway, and blah, blah, blah. You have to deal with all the congestion of Tokyo. But in this skyscraper, there's no congestion to get in and out. And so as long as everything lives in that skyscraper, in that L2, then it's great, you've scaled. But the reality, of course, is that there's many L2s. There's Base, there's OPBNB, there's Arbitrum, there's Hyperliquids over here. There's all this other stuff that you have to deal with pushing through. Going down to Tokyo, you have to go down to Ethereum to go deal with all of the hubbub of dealing with the actual underlying blockchain. So L2s are one part of the story of how you scale. But it's not the only solution. It's not a complete solution. In the same way that skyscrapers are not the only way we're going to scale Japan, you have to also build other cities. And that's my view on L2s.
Thank you. So blockchains are cities, and what is the internet?
What is the internet? The internet truly is a network. The internet truly is a network. Is that adding another IP onto the internet adds no marginal cost. And that's why the internet scaled in a very different kind of way, and why people use these mental models thinking about blockchains like the same way they thought about internet businesses or social media businesses or e-commerce businesses for that matter. There's in venture capital, there's what's often called the network effect. People are overly broad with what they call network effects. One particular kind of network effect is an economy of scale. Economy of scale means that as you get bigger, it becomes cheaper to produce the marginal unit, right? So people think a lot about, like Toyota is a perfect example. When Toyota has more car sales, the more of a audience they have, the more factories they build, and actually the marginal car gets cheaper the more they invest in automation. That's called an economy of scale. Blockchains have diseconomies of scale, meaning that the more they add, the more expensive it becomes to add the next unit, right? If you remember in 2021, when blockchains were crazy congested, it was insane bull market, and it cost, $50 to do a swap on Ethereum, right? That is a diseconomy of scale. The more people want to use this, the more expensive it gets. That is the reason why, as an investor, you have to think very differently about traditional internet businesses versus blockchain businesses, and why it isn't the case that as you add more and more people, the ability to own the entire market actually gets weaker, not stronger.
Now, the reason I wanted to ask this is that from the beginning, we thought the internet is one, and everybody can do anything everywhere, but clearly we have segmentation now. The Great Firewall of China was actually down for 2 hours last week. People did notice, so they couldn't get anything. So we've got that area. Then we've got privacy regulation in Europe and also in Japan. And then we've got the Wild West, which is traditionally is the US. And so you have physically one, but you still have different areas to play in, and how does that affect kind of the blockchains as cities see this?
No, it's a very good point. So the internet, people in the early days of the internet, they had this very utopian vision for the internet. Very similar to how I remember people, when I first got into crypto, talked about crypto. Is they talked about it would change the world, it was going to make everybody united, it was going to make cyberspace one big digital commons with its own currency. And we now realize that that was a little bit naive. Is that crypto is intrinsically political. It's intrinsically political, right? Satoshi Nakamoto created Bitcoin in response to the great financial crisis, in response to what he felt the banks and the Federal Reserve was doing to debase the currency. This was a political act. And we see now, with China having banned crypto, but also, speaking of the internet itself, like the internet had the same thing in the beginning. In the beginning of the internet, people thought the internet was going to be this place that brought all the world together, that everybody was going to be online and talking in the same forums, and people from America and China and Japan would talk to each other and realize that we're not so different, and we really have this global humanity in common. And then, of course, now we see the real internet, and it's like, yeah, that's not what it's like. Now we have people in every single country on their own platforms, speaking their own languages, arguing with each other, fighting with each other, calling each other names. We have all this disinformation and censorship, and then you have China banning all the stuff of the public internet. You've got the UK now cracking down on the open internet, and it's everywhere all the time. It's always going to be the case that information, and especially more so than information, money, which is what crypto is trying to digitize, is intrinsically politically fraught, and you have to fight for it. You have to fight for it. That's true in Japan. It's been true in Asia, and it's very true in America. So I'm obviously an American. And we have been fighting the world's most powerful government for the last 4 years, and we've only recently won. And now we have the case that it just the turnaround that you can see, and it's a large part of the reason why you've seen digital assets run up so much in the last 6 months, is that we've gone from the world's most powerful government saying that basically crypto is evil, that it's only used by drug dealers and con artists, that it's only used by Hamas and criminal in North Korea and criminal organizations. And just in the last 6 months, now we have stablecoins being regulated by the Federal Reserve. Right? Now it's the big banks, JP Morgan and Goldman Sachs are all getting into the stablecoin business. Right? That happened in 6 months. Why? Because of the political fight that had to be waged by the crypto industry. So the lesson from the internet is the same lesson for crypto, is that technologies alone will not give you the answer. Technology alone is never enough. It always has to be a political battle. And there were many people who fought those political battles in the 90s and the 2000s about the internet. There were people who went to jail. And if you remember, the original cypherpunks who created cryptocurrencies, the first battle that they fought was not over Bitcoin, but was over encryption. Encryption in the US used to be illegal, regulated as a military munition, meaning that if you wanted to use encryption more than I think it was 32-bit. If you wanted more than 32-bit encryption, 32-bit encryption is so weak you can crack it on a laptop in half a second. Okay? If you wanted more than 32-bit encryption, you needed a license from the military in 1997. Okay? It was civil disobedience. Actually, Adam Back, who was, I think he's here. Adam Back was one of the people who, as an act of civil disobedience, put the RSA algorithm, which in Perl, you can write the RSA algorithm in about 5 lines. He wrote the RSA algorithm on a t-shirt and had it in his email signature. As an act of civil disobedience, this was against the law in the US in the 90s. But it was through the fight of cypherpunks that cryptography itself became legal. And only after all those fights down the road that we finally fought the fight we fought last year to make cryptocurrencies themselves legal. So that's why I say this is a long tradition. We are at the tail end of that tradition, and there are many more fights yet to come. But I'm very proud of what the industry has accomplished over the last year, and of the very small part that we, as Dragonfly, have gotten an opportunity to play with that in supporting some of this stuff in the US, as well as many of the founders who went out and fought those battles.
So let's talk about money. You raised 650 million last year. You're raising a next fund already. How are you going to spend it?
It's a good question. Crypto moves very fast. If you look at our last fund, which we raised that fund initially in 2022. In that fund, some of the big success stories that we invested into, we led the seed round of Athena, we did the seed round of Kaito, we did the seed round of Monad, we led the Series A of Mega ETH, we were Series A of Polymarket. So we invested in many of the most important applications and infrastructures in the last cycle. But one thing that you learn being a crypto investor is that every vintage is different. You cannot just blindly invest the same way that you've been investing in the last few years because crypto moves so fast. It evolves very quickly. And you have to stay nimble on your feet and not get married to the ideas that you were excited about 2 or 3 years ago, because 2 or 3 years ago is an eternity in crypto. 2 or 3 years ago, people were still talking about NFTs and the metaverse and all this other stuff. And now nobody, it's a whole different world now. And so many of our investments are focused much more on stablecoin infrastructure, on payments and payment finance, on the intersection of crypto and AI, which I know that we were just talking about backstage. There's a lot of new stuff that's always being cooked up in crypto. And so as VCs, the thing I always tell investors is that in crypto, you do not want to be too thesis-driven. You don't want to get married to your own ideas. You don't want to get invested in your own blog posts or your own podcasts because you just don't know. You just don't know what's going to happen. And your job as an investor is to stay with your mind as open as possible. And as an investor, what I often tell people is that our investment strategy is very bottoms up, not very top down. So we don't really, although I'm telling you this, we don't go around saying like, oh, anybody who has stablecoins, come tell me I want to invest in a stablecoin thing. I don't really care if we don't invest in any stablecoin projects. That's not how I invest. What I do is I look for founders, for ideas, for opportunities that look really exciting. Like for example, when we invested into Athena, we did the seed round of Athena in late 2022. This was after Luna collapsed. And when Luna collapsed, every investor thought that DeFi is uninvestable now. Because of course, look at, it's the most despicable collapse. The whole industry was ashamed. And not just DeFi, but a stablecoin, a crypto collateralized stablecoin, totally beyond the pale. Nobody wanted to touch Athena in the seed round at that time. And we met Guy, and we got to understand the idea, and we thought, this is a good idea. This should totally exist. And it's like, yeah, I don't care if people think that stablecoins are dumb or that DeFi is dumb or that this stuff is not investable anymore. Like, I think people will get over it. They'll eventually move on, and they'll realize that Luna is not Luna was a bad idea. That doesn't mean every stablecoin is a bad idea. And so having that ability to think bottoms up is very essential to being a good and a disciplined investor. And so that's why, although I have these ideas of what I'm interested in, at the end of the day, it all comes to a great entrepreneur coming in the door with a great idea and a great angle of attack.
But your fund still runs, 7, 8, or 10 years, right? So if you have like a liquidity event where you get tokens and you get tokens back after 2, 3 years already, which is much faster than equity traditionally, what do? You keep it in the fund and put it in the next idea, so you return it already at that point to the investors?
So venture funds are structured such that you generally cannot recycle. So you can't sell money that you've made to go make other investments. That's really more of a hedge fund thing. Venture funds are generally expected to be closed-end vehicles that once they liquidate their assets, then they go and distribute them directly to their investors, their LPs. So for us, sometimes we sell, sometimes we hold. It really depends. Some of our assets we've been holding since we originally invested 7 years ago. Other assets we've sold the moment that we've gotten them. So it really depends on the asset. We're generally long-term investors, and so we invest for the long haul. For many of these assets, from the time that we invest, it's like 5 years until we even get our first tokens. So if you look at Monad, we're not going to get any tokens. Supposedly they're going to mainnet this year. We invested in 2022. It's 3 years later. We'll probably get our first tokens, maybe late next year, which basically is like 4 years until we get our first tokens actually land in our wallet. So the timelines for these tokens, it really, really depends on the particulars of how long it takes to build the underlying project. But with all these things, we try to be as long-term aligned with our founders and as transparent as we can be about our holding periods and about our strategies. But at the end of the day, number one thing that we try to do is to be the best, most valuable investor on an entrepreneur's cap table. the end of the day, that's what earns us the right to be who we are in the market.
So under the Dragonfly umbrella, you also have a hedge fund and you have a public market trading desk, right?
So we used to have an actively traded hedge fund. We ended up spinning out that hedge fund to Brevin Howard. Now we only have a long-only vehicle, and we have our venture funds.
Got it. All right, so to wrap it up, we need to talk about blockchain and AI.
Okay. How should I attack that question? Just riff?
What's the opportunity?
What's the opportunity? Yeah, it's interesting. So this is an area I've been thinking a lot about, and I spend a lot of time chatting with founders and also delving into what's happening at the forefront of AI. So there's two directions of causation to think about at the intersection of crypto and AI. The first is, what is crypto going to do to AI? So these are things like, how are agents going to be using crypto assets in order to engage in financial activity? How are model serving and or model training going to be decentralized? How are you going to avoid model censorship? This is one of the things that I think, depending on where you are in the world, this might be more or less obvious of why this matters. I'd like to make this point that right now, at least in the U.S., I don't know what the situation is at all in Japan, but in the U.S., there's basically no regulation of AI, pretty much at all, right? So if you want to create a model that's very leftist, very rightist, that's racist, that's trained on illegal material, you can basically just do it. There's no laws, nobody's gotten sued, nobody's gone to jail, like nothing, there's nothing at all right now. And there's a lot of argument about what should be the rules, but very clearly right now, there are no rules. Every single big lab is training on YouTube data, and everybody knows it, and no one's doing anything, right? So eventually there will be lawsuits and some kind of case law, but right now we're not there yet. So the reality is that you can run a model, you can go train a model on unlicensed data, and nobody will care. Nobody will do anything. You can serve it on Amazon. Amazon's not going to stop you. Like, more or less, it's Wild West. That's not going to continue. That's definitely not going to continue. And as these models get more and more powerful, and as we give them more and more control of important elements of society, whether it's in credit scoring, or maybe even in legal decisions, or in policing decisions, or if it's in control of how we administer power distribution, or all these other things in society that almost certainly are going to be controlled by AIs, AIs are going to become very, very politically important. And when they become politically important, people are going to want to control them. And those people who are going to want to control them are going to say what you can and cannot do, what they can and cannot say, what they're allowed to tell you and what they're not allowed to tell you. Now today we don't feel that, at least not in the US. Again, don't know what it's like in Japan. But in the US, once that happens, these will be the most powerful technologies in the world because they're going to be everybody's inner critic, everybody's confidant, everybody's advisor, everybody's part of everybody's organization. In the same way, in China, the CCP sits within every major company. And as a result, the CCP sees everything. They hear everything. They know everything that's going on. And everybody understands that CCP wields enormous power over all industry in China. The same thing will be true of AI. And it might be OpenAI, it might be some other company, but the government is going to want control over that. They're going to want control. And when that happens, it hasn't happened yet, but when it happens, that is when decentralized technologies are going to become really, really important. Because what is the point of Bitcoin? Why does Bitcoin need a blockchain? Why couldn't you just have some company in Canada run Bitcoin out of a server, right? And say, oh, I'm the Bitcoin company. I'm based in Canada or based in Switzerland, let's say. Nobody can sue me, like the Pirate Bay, right? Nobody can sue the Pirate Bay because they're in Switzerland. Or Sweden, sorry, it was Sweden. I'm in Sweden, nobody can sue me, and so I agree to run Bitcoin, I'll never steal anyone's money, right? Nobody would trust that. It's not the same thing. Even if nobody will sue you or whatever, it's not the same thing if it's not credibly neutral. Because I understand the incentive to control that pot of money is so powerful that no human being could ever resist it. That same thing will be true of AI, and when that happens, Satoshi Nakamoto created a blockchain to avoid censorship. Until that censorship happens, no one's going to use this. No one's going to use any decentralized AI stuff because it's worse. It's worse than all the big models. But eventually, censorship will be the reason why decentralized AI is going to matter more and more. So I realize we're up on time. I didn't have time to get to the second part of that. But that's my partial answer.
Wonderful. Thank you very much. Ladies and gentlemen, Haseeb Quereshi.
Thank you.
Big round of applause.
Thank you very much for that very insightful discussion. 改めましてご登壇いただきましたお二方に改めて拍手をお願いいたします。